Hello everyone, I'm Alec Geesting. I'm an advisor and CFP here in our Denver, Colorado office with Prime Capital. I'm here today with our managing director, Sean Clancy. I'm going to be asking him a few questions about alternative investments. So the first question, Sean, I think that comes to mind for everyone is, what is an alternative investment?
Yeah, we get that question a lot. Essentially, alternative investment is anything that's not a traditional stock, bond, or cash. And so when we look at the construction of someone's portfolio, most people own those few things: stocks, bonds, cash. An alternative investment is something like real estate, could be infrastructure, could be private equity or hedge funds. So it's really investments that don't fit that traditional publicly traded security that most investors have access to through their 401ks, their IRAs, or maybe their brokerage accounts.
So it sounds like an alternative investment could be a lot of different things depending on what you're trying to invest in. And so that leads into my next question. If you find a private equity investment, how could you vet it? Or Sean, how do you go out and find a private equity investment that's suitable for clients?
Yeah, private equity, it's specifically in private equity, that's a big word. It's not easy because anything that's technically not traded on an exchange will have certain characteristics that make it very different than a traditional stock, bond, mutual fund, ETF. Everything in the private space has the opportunity to look really good, but you have to really dive down into the experience of the underlying manager or sponsor that's offering up this investment. So if it's real estate, what's the track record of a company that's proven to buy good real estate, manage it, eventually sell it? If it's in the world of private equity and in buyout, have they proven that they've gone in and they've executed good transactions to buy companies, to build them up to a level to eventually sell them? It takes a lot of time and effort to do due diligence in the alternative space.
You hear a lot of things, or you see a lot of things about, oh, I returned 3x in this private equity investment, or private equity is really risky. What are some things that people need to consider beyond maybe just pure return when they're looking at an alternative investment?
Yeah, that's probably the biggest component of alternatives or private equity. There's what's called an illiquidity premium. And most often an alternative investment is not publicly traded or daily liquid. And it could range from being what's called a tender offer fund or an interval fund that might have quarterly liquidity, but on a limited basis. Other private funds or private equity could be, hey, your capital is completely tied up until they sell the real estate, they sell the company. You could, in all intended purposes, have no access to your money for 4, 5, 6, maybe up to 10 years. So there's that illiquidity that makes the opportunity pretty great in alternative investments. Investors just have to understand what it is they're signing up for from access to their capital.
How do you get started into an alternative investment? How much money can I put into it of my overall portfolio? What makes sense?
Yeah, for a long time, I think people correlated alternative investments or private equity with having to have millions and millions of dollars. If you look at institutions, foundations, endowments, historically, those have been a lot of the organizations that have had the ability and the amount of money to invest in private equity or alternatives. The landscape has changed quite a bit, even just in the last 10 years or so. The formation of what's called tender offer funds, interval funds. Some of those minimums go all the way down into that $10,000 range to $50,000, depending on the funds. And where it used to be qualified purchasers or qualified clients with a few $1 million in net worth, those have come down to the level of accredited investors. So there's a much bigger pool of investor base that have access to these types of investments.
Sean, I know a lot of times when people think of alternative investments, they can sometimes think that must mean I'm going to get a really high rate of return, and this is going to feel like one of those unicorn investments maybe.
Yeah.
What are some things people need to be wary of when they're vetting an alternative investment?
Yeah, look, everyone's looking for, when you mentioned it, the unicorn investment, which is high returns, safe, and full access to your money. Generally speaking, in any investment, you're not going to get all three. If you find it, let us know. But with alternative investments, generally speaking, of that three-legged stool, you're going to give up liquidity. When you're not forced to sell an investment during volatile market cycles, times when things aren't great. And a great example right now is real estate. If you owned a bunch of commercial properties and tenants have been fleeing and all of a sudden buildings are half empty, if you don't have to sell that property today, you essentially haven't banked any of your losses, you would want to hold that for the next 4 or 5 years. And inside of alternative investments or private equity, those managers get to dictate some of that liquidity. So if you don't have to sell, you get that opportunity to ride through an economic cycle. Versus a publicly traded security, a publicly traded real estate investment trust. If an investor wants their money out, they can do it. They can sell, and all of a sudden, that fund, when you wouldn't want to be selling investment, has to redeem shares, has to sell stock, even if it's not at a great time.
If I were to look at an alternative investment, what's the advantage of going through a registered investment advisor or a financial advisor versus going direct to an institution?
Yeah, it's a good question. I think oftentimes a lot of our clients get put investments in front of them, and maybe it's from a friend, from a family member, an acquaintance. And what maybe hasn't happened is that extra layer of due diligence, of research to find out, again, what is the track record? How long has this company been around? Going through all the metrics that maybe just a traditional investor wouldn't take the time to go through. So having that additional due diligence layer, compliance level, making sure that that investment checks all the boxes, and an appropriate level of risk and risk profile for the client is so extremely important when looking at alternative investments.
Piggybacking off that question, if someone was, say, a first-time investor into the alternative space, they maybe had a windfall from a company or an investment, and they feel the need to diversify into other asset classes. What would be a good starting point of someone's liquid net worth to put into an alternative investment like this?
Yeah, that's the risk in looking at alternative investments is they can look really attractive because of their maybe historical returns. But given that illiquidity nature to them, we generally speaking from our firm standpoint don't want to see clients exceeding that maybe 10 to 20% of net investable assets into alternative or non-daily liquid investments. It's easy to get caught up in the opportunities and the returns in that space, but at the end of the day, life happens, and having too much of your money tied up in an instrument that you can't get your hands onto can create problems down the road.
Sean, who would be someone that would have access to an alternative investment to begin with?
Yeah, it really depends. There's different levels of alternative investments and qualifications. In the most recent, probably call it 10 years, with the formation of interval funds and tender offer funds, those investor levels have come down to the accredited investor, and minimum investments all the way down to that maybe a $10,000 level. Now, not all of them are that. If you look at true private equity, some of those minimums can be fairly high, $250,000, $500,000 levels. But to get a true allocation into an alternative investment, it's really opened up to majority of investors in today's day and age.
Sean, one thing that I think an investor's mind would go to when you say just the word alternative investment in general is, gosh, is this a riskier asset class than a publicly traded equity? What would you say to that if someone said, I'm not really interested, I think there's a lot of risk that comes with an investment of this type?
Yeah, it's actually quite the opposite. A lot of research shows in a traditional portfolio of stocks and bonds and cash, if you took an investor that was a 60-40 portfolio, 60% stocks, 40% fixed income, bonds and cash, and you inserted some portion, maybe called a 10% allocation to alternative investments, it actually lowers the risk profile of a portfolio and gives greater opportunity for return. So while the term alternative investment or private equity might sound more risky in nature, it actually has the opposite effect of portfolio construction.
Interesting. One other question I have too is, how often do these alternative investments price themselves? If you go look at maybe the share price of an interval fund you're in, how often is that going to be changing?
Yeah, It varies by fund. A lot of the tender offer funds or interval funds may price on a monthly basis, maybe some on a quarterly. True private equity or hedge fund type investments, they might price maybe as little as once a year. So depending on the fund that you go into, the actual value of your underlying investment won't be as clear as pulling up your iPhone and checking to see what that stock did that day or what that mutual fund price closed at the end of the day. So varies by fund, so it's not quite as transparent, but it varies just based on the investment.
If I were interested in investing in an alternative, am I able to do that strictly through a non-qualified account, funding it from cash I might have in a savings account, or is this open to an IRA or a Roth IRA as well, and other different types of accounts?
Varies by the type of the investment, but oftentimes a lot of these alternative investments are accessible through an IRA, which is great. You get to continue the tax deferral. Some of the benefits of alternative investments or private equity is using non-qualified dollars or cash on hand to eventually get to that long-term capital gains treatment that we're all looking to do. But the reality is many of these investments can be used in either qualified or non-qualified accounts, depending on where you have availability and access to cash in your portfolio.